Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Aptos and its token APT. None of the content is financial advice. Let's get started. In this video, we'll be discussing Aptos through the lens of the simple moving average based model, the dollar cost average based regression based model, the time weighted average price based model, as well as analyze the recent price pump for Aptos from the technical perspective, as well as provide a bull market price target. So let's get started. Over the last 24 hours and as over the last 7 days, Aptos has rallied. The price is at around, if you look at the price right now at around $6.41, rallied 14% in the last 24 hours, 7 days at around 8.5%. So the market cap at around 3.7 billion. By rank, it's ranked number 32 by market cap. Has a circulating supply at around 587 million, which is about 50 to 55% of the total supply. Does not have a max supply. This is one of the cryptos which got launched in the bear market of 2022. Around October of 2022, had three distinct pumps, one in 2023, one in 2024, early in March, and then late in December. To analyze these rallies in terms of the technical levels, you can check out these are the weekly price analysis for weekly candles for Aptos, and we can find that there are three distinct rallies, and the support was essentially, if we ignore the the VIX, where the support was essentially at around $4.75. This support was hit 1, 2 and 3 times, and then there was a bounce eventually. And from a Fibonacci level perspective, from the $20 all-time high that was achieved in early 2023, the next rally that occurred in March of 2024 went to that 0.786 fib level at around $16.93, which is again in our analysis is a key level to watch. And the third time around, the pump that occurred in December of 2024, the rally went to that 0.618 fib level at around $14.23. Right now the price is at around $6.41. The 20-week moving average is at around $9.66. The 21-week exponential moving average is at around $8.58. So if the prices were to rally, the key level to watch is that 0.23 fib level at around $8.10. Again, if it takes a couple of weeks to get there, the moving averages would also, again, they both of them have this downward slope right now. These 21-week exponential moving average as well as the 20-week simple moving average has a downward slope. So there could be a scenario where the price meets them at around $8.10 in the coming weeks. Again, not financial advice. So if we look at how these 618 and 786 fib levels are confluent, we have some models, two models to identify that confluence. First is the simple moving average based model. Again, the 20-week simple moving average price with respect to how the price is doing with respect to the 20-week moving average. That's how this price is color coded. If you observe, the warmer colors are assigned to higher risk levels, such as more than 70% risk, and cooler colors such as blue, purple are assigned to lower risk level. This model does two things. First is tries to identify the bottom or avoid DCA at or dollar cost average at levels where, again, let's say if you have this hypothesis not to DCA whenever the risk is more than 30%, again, does help identify when to avoid essentially avoid DCA during the mania phases or euphoria phases for not just Aptos, for top 100 cryptos. Again, we have similar models for most of the top 100 cryptos. Again, you can go further down the risk, say that only whenever the risks are less than 10%. Again, there are no guarantees that in every dump the risk will go to less than 10%. So again, personally speaking, whenever risks are lower than 20%, that's when I look at these models for any purchases. Again, right now the risk level is at around 7%, and if we look at some of the forward looking guidance, that's where the confluence comes from. The moderate target for Aptos, at around 60% risk, between 60% 80% risk, you will find that the price at that level could be at around $14.82, and at 80% at around $16.50, which is quite confluent with the 0.618 at coming in at around $14.23 and 0.786 coming in at around $16.93. Again, if you extend this to 85% risk, it's kind of close to $16.91. So that's one area of confluence and a price target. The second model is the dollar cost average based model, takes into consideration the fair value represented by this polynomial regression model, and based on how the price is doing with respect to the polynomial regression model, again this has a volatility adjustment component and time adjustment component added to it. So with respect to those deltas between the price and the fair value, that's how these risk colors are assigned. Again, this model, like the previous model, has dual purpose. First, to identify the high risk territories where pausing dollar cost average or again taking profit makes the most amount of sense. So for example, if you are a conservative investor, again taking profit or thinking about taking profit in a staggered manner whenever the risk is higher than 50%, again this model does identify those zones above 60%, again for more aggressive intent. Again, as you move higher down the risk, higher up the risk staircase, you would find that not always you would get that kind of high risk estimates in all of the rallies. So that's why, again, for example, over here the highest that we went in December was at around 70% risk by this model, but by the other model that we have, the SM model, that's why we have three different model to do distinct jobs or distinct purposes. So for example, for the from the SMA model perspective, the rally that occurred in November December went as high as about 92%. So again, this model also, like the second model that we discussed, identifies the peaks as well as the bottoms. So two models for the same purpose. The reasoning being that first, moving averages do help identify some of the elevations and the undervaluations, but what also matters is the fair value analysis, which is covered by this regression based models. Right now the risk levels is at around 20% by this model, whereas the simple moving average based risk level is at around 7%. So from this model as a conservative target, one area for moderate risk is between $9.64 and $13.44. Again, the higher end of the target meets that $14.52, which is confluent with that 0.618 fib level. Whereas again, if we were to look at a 2 standard deviation peak regression residual applied to the fair value, that ceiling is coming in at around $12.55. So again, that could theoretically start the blow off top phase like it did once in January 2023 as well as in April 2024. So let's look at how the shape of the regression function matures as and when, if there is a further pump in the market. So that's one area to look for. Again, all of these models gets updated once every 24 hours, as well as, again, not just these kind of analytics, we have other analytics on the website, link on the bottom of your screen, cryptoweeklies.com, such as this peak valley analysis indicator, where this per the risk lens between 0 and 1, that is between 0% and 100% risk, we identify how much the bull market is completed. As of 17th of February, its completion is only 37%. Again, this is not a linear process by any stretch of the imagination. So in December of 2024, the completion at early December was at around 60%, but again, now the risks have cooled from this high risk of about this orange color to this moderate risk of yellow, and now we are in the green zone, which is the low risk environment since early February of 2025. Right now at around 37% risk. Again, this model does identify when we spend some time in low risk, that's theoretically the best time to DCA. The lowest risk is the best time to DCA. We have been, the last time per this model we were here was early November of 2024. Now that we are in the low risk regimen, again the moderate risk, we spend most of our time in late November till about late January, early February of 2025, late November 2024 till that. And then there was a big gap between between about early or mid-April 2022 till this November 2024. That was the accumulation period per the model. The highest risk, that is anything above 60% risk, again we spent only 3 to 4 days in early December of 2024. Haven't seen that since about January 2022, that kind of a market. So these kind of analytics do help identify what is a particular altcoin such as Aptos is doing with respect to where it stands with respect to the wider market. That is the wider crypto market. This model, it takes into consideration what the top 100 cryptos are doing on their volatility, alpha, beta, risk adjusted or the Sharpe ratio, or and as well as percent drawdown. So with respect to these kind of analytics, we also do have for the higher capped cryptos such as Bitcoin and ETH an analysis which does eventually help while analyzing alts with respect to Bitcoin if the risks are plummeting. So let's say Bitcoin is at around this moderate risk at around 42%, ETH, which is again the second crypto by market cap, at around 27%, and by this you could also extrapolate alts could be somewhere between this low risk and lowest risk, because again if Bitcoin is in a downturn, ETH underperforms and alts underperform that ETH and Bitcoin. So again, whenever that's where you get the best kind of deals. Again, that gets represented into the risk levels for alts such as Aptos. Or again, we saw that risk for Aptos is at 20% on per the DCA model, as well as per the SMA model at around 7%. So again, you can see that there is a confluence between the wider crypto market and correlation between that and the higher capped cryptos such as Bitcoin and ETH, and the lower capped cryptos such as Aptos. The third model is the time weighted average price. Could be the best model for the bear market accumulation or the downturn based accumulation, wherever the price, especially again a caveat for this crypto for this model is the underlying asset should be of high quality product and should have further upside. Again, that could be established with respect to metrics such as is it getting used, adopted, does it have a continued rally and presence in the top 20 to 50 cryptos by market cap. So those kind of metrics do help identify if the asset is worth considering. And again, this model particularly does a great job in identifying if the asset is in accumulation phase, especially if the price is consistently lower than the blue line, which is the time weighted average price, where the price has spent inordinate amount of time above this blue line. Right now, the time weighted average price for Aptos is coming in at around $8.61. Again, accumulating below this blue line. Again, eventually, if there is a mean reversion trade back to the upside, does it eventually work out? So that's again, Aptos per this model is at around significantly down from its time weighted average price, and whenever the price is below the time weighted average price, it's considered zero risk environment per this model. Again, we have different interpretations of risk and reward for different model, and these three models together help form our estimated bull run target for not just Aptos, for all major cryptos by market cap. Now with respect to the particular to Aptos's risk journey, the SMA risk at around 9%, time weighted average price, as I mentioned, as the price is below the blue line, 0% risk considered by the model. The regression risk at around 22%, weighted risk is 13%. So estimated bull run target for Aptos is at around $40, that is $40, and representing a reward of about 7x from the current price of about $6. So if you look for confluence between this and the technical analysis conducted by Fibonacci levels, again you can see if there is a new all-time high in store for Aptos, that could be somewhere between the 1.618 fib level and 2.618 fib level. If we take average of about 46 and 30, you would get the value somewhere close to that $40 target that we have for Aptos on our website. And with that, I would like to conclude the video with saying that the first key levels to watch is if the price meets that the 20 weeks and the 21 week SMA at around $8, and then again if the rally continues, the first target could be between the $12.34 and $14.23, and if the rally does continue, the $16.90 becomes the most likely scenario for the current rally, and the eventual bull run peak for Aptos per the confluence of several models is at around $40. And thank you for listening. Hope you have a great rest of your day. Bye bye.